Hey everybody, happy Thursday. How you doing this morning? Hopefully you're doing better than I am. I have had nothing but issues with my internet. We got some weather coming through, which is a blessing and a curse. It's a blessing because, the pollen has been so bad. My brown car turned green. So the rain and such that we're getting right now is washing my car clean. But beside that, it's unfortunately messing with my internet. So I have literally lost internet 3 times already this morning, just trying to get ready for this live stream. So if I do lose this live stream, by whatever reason, my internet goes down again, StreamYard, which is the service I use to do these live streams, will hold the stream open for me to give me an opportunity to kind of jump back in here and try and keep going. And if you're interested in StreamYard, they have free versions if you're thinking about going live, trying to do live streams, or the hell, you can even use it for recordings, stuff like that. Link in the description. Appreciate you using that. But like I said, they even have free versions that you can use. But anyway, appreciate everybody being here this morning. If you're just chiming in, make sure you smash up that like button. Appreciate that. And subscribe if you're new here. Appreciate the subscriptions. YouTube has been really throttling my channel. Matter of fact, for that matter, appreciate you sharing this live stream. Thank you for that in advance. Let's see who's in the live chat this morning. 100 Air in the live chat. Good morning, sir. Our first one in the chat this morning. Appreciate you. Chris Hanley also in the chat. Welcome, sir. Automatic Beats in the house. Good morning. Good morning to everybody in the chat. So I'm going to try to get through this stream without losing any internet. We'll see what happens with that. Let's hope. If it does, if it does go down, like I said, if you have the ability to be patient, I'll get back here as soon as internet service allows. All right, let's jump straight into the markets because a lot of stuff to discuss today. You've probably heard about it by now. The latest FDIC report, basically out there, putting it out to the Americans that there are over 60 banks on the verge of no, you can't hear me. I don't know. It looks like I might be getting some signal back. I'm back. Okay. Listen, all right. I'm just jumping right in because Lord knows we are on precarious ground right now. So let's bring the market up here. Let's bring the market up, not financial advice. Let's refresh that page and get to business. And now I'm not going to be able to see the page that has the live stream on it while I'm doing this. So hopefully, I froze a bit. Yeah, like I said, internet is not looking good for me today. All right, let's get going. So Bitcoin looking pretty good, right? I mean, all things being equal, 71.2 at this point, and at one point I think it even hit 72K. Looking pretty good. I think it's going to be very strong going forward now. We've had major inflows into the Bitcoin spot ETFs. Basically, just the spot ETFs alone are pretty much eating up the daily mining supply of new Bitcoin. I mean, technically, they're buying it off exchanges, and the miners are probably keeping that. But you get the point. Like, the amount of Bitcoin available is just going to keep dwindling because it isn't just about the ETFs. It's about retail. It's about companies like MicroStrategy who are just buying left and right. There is limited supply of Bitcoin, and there are going to be a lot of people fighting for it. So right now at 71.2, looking pretty damn good. Ethereum back up over 38K, 38.32, not bad. A lot of trading going on, obviously. Look at this. Binance up 20.5% right now. BNB up 20.5%. And I love the fact that this thing just keeps going up no matter what the U.S. government tries to do to these people. And again, the biggest, largest cryptocurrency exchange on the planet here. And no matter what regulators try and do, the community as a whole basically tells them to go screw themselves. I love it. Solana up 2.2%, 172.53 for Solana, looking like a little bit of an uptick, and that's a good thing, I think. All right, where's automatic beats? Come on, bud. I keep looking for the there it is. I'm guessing, right? Oh, nope. What was this? Automatic beats said what? BNB most slept on large cap coin. Yeah, you know what? You're probably not wrong about that. BNB is going to go through the proverbial roof, I think. And the more that people continue to move away from all this US bullshit, the better it's going to be. And again, my internet looks like it's fluctuating. I apologize. And we have, sold to the moon. That's what I was looking for. That's what I was looking for. Appreciate you, automatic beats, as always. All right, I'm going to keep going here regardless what my internet looks like it's doing, and I'm just going to try and power through this. Excuse me. All right, so where are we? XRP. Again, basically a stable coin at this point. Looking pretty solid in that 52 cent area. Doge still above 16 cents. Cardano, boom, solid, 48 cents, 45 cents. Looking pretty good. What else we got here? Avalanche, AVAX, not bad, 36.64. Chainlink, down still a little bit here, 17.37, but again, I got the thing down here, not financial advice, but $20 or less on that. Perfect. BCH up 5.5% today, 494. Uniswap basically holding steady here, down almost 5% on the day, but still above $10. I like it. Matic looking pretty good, up over 2% so far this week at 72 cents. Litecoin pretty much holding steady at 85.16, up a little bit. Pepe looking pretty steady right now, about an average of 2% up. Going to keep going here. Can't not stop at Caspa. Caspa on fire this week, up 28.8%. So say 29%, round that thing off. Just under 18 cents for CAS. So that's great for everybody holding CAS. Render, again, one of those projects you can come in and vote for DC in our DCA portfolio on Crypto on the Rocks every Friday night. Now that I'm saying that, just to put it back out there to everybody, because I know some of the people that are in this live stream join me on Friday nights for Crypto on the Rocks this week. I have a family obligation, so no Crypto on the Rocks tomorrow. Possibly an after hours crypto. I'll let you know. It'll be a last minute announcement if that's the case. Kind of depends what time everything wraps up and I get back in front of my computer. But right now, definitely no Crypto on the Rocks tomorrow. Next week, right back at it, and you guys can vote for what we're going to see in the DCA portfolio. And yeah, Chris here saying Caspa to the moon. Yeah, you know what? Caspa's on fire. On fire. I'm liking it. And if you're holding Casper, you're doing all right, I think. Doing all right. All right, let's keep going a little bit more, and then we'll jump into what I have set up for you today. HBAR. A lot of stuff going on with HBAR. I'm still investigating with the Hedera Foundation, putting out a lot of trash talk. I don't know what the hell's going on with that, but that could be why this has become a stable coin here. 10 cents for that. Cheers, by the way. Filecoin back up above $6. That did not make the cut for the DPIN DCA portfolio. Whiff, look at this, still down over 5% this week, 335. What else? Stellar, 10 cents, pretty much stable coin here at this point. Look at Floki, up 25%. 25%, crazy, right? And I think we'll end right here with Monero. Up 12.9%, so up 13%. This has been doing very, very well, and I think, again, my supposition is that privacy coins will be a necessity as we go into 2025. And so there we go. That's the markets. And like I said, I'm gonna just kind of clip along here and try and get through this before I lose my damn internet all the way. Listen, don't forget, help me out, smash up that like button, share this. I would greatly appreciate that because, like I said, YouTube been throttling my channel for some reason, probably because I'm telling some freaking truths that they don't want out there. But anyway, so I'd appreciate it to try and get the word out to more people. At the end of the day, they can't throttle people who are coming in direct and watching the video or the live stream. Appreciate it. Okay, so recent report, FDIC putting out saying, listen, we got 63 banks in the United States that are insolvent. And, you know, if this continues, it's basically down the tubes. Of course, they don't tell you which banks they are because they don't want to start a bank run that will actually just create the waterfall that is eventually coming. I've said before, matter of fact, I've been talking about this for over a year, or well, not quite over a year, just about a year, almost a year. Matter of fact, links to those videos where I was talking about this is in the description of this live stream, those live streams that I did. The first one that's listed there, actually, Jar had joined me, and we were talking about the latest couple of bank collapses that happened, the previous bank collapses that had happened in the beginning of 2023. And we talked a little bit about the future and, again, trying to insulate yourself with cryptocurrency to prevent that catastrophic things happening to you. Well, here we are almost a year later, and guess what? More banks on the verge of collapse. Let's take a quick look at where it all started. I'm going to dip back about a month ago to a CNBC article that was put out. And I mean, I think it says it all in the title of this particular article. As a matter of fact, don't forget, everything that I'm talking about here today is in the description of this live stream. Go ahead, check everything out on your own. And, you know, you can get into more detail, do your own research, because you should do your own damn research, right? I mean, you gotta understand what's going on and then make the best decisions for you and your family. But basically, like I said, the headline here says it all. Why hundreds of US banks may be at risk of failure. And for the most part, this stems around the crisis with commercial real estate. A lot of these banks are basically out over their skis with commercial real estate loans. And there are just delinquency after delinquency after delinquency happening. And here's the thing. I know that puts pressure on the banks, and I mean, that would only make sense, right? But here's the thing. The government knows about it. They're not doing anything about it. The Fed knows about it. Fed Chair Powell even testified before Congress about it about a month ago, shortly after this article came out. I actually made a short about it, and it just aired on my YouTube channel and Facebook channel this past Saturday. Let's take a quick look at that short. It's less than a minute long, so you'll get the gist. Basically, Powell is saying, yeah, you know, we're in contact with these banks. We know what's going to happen, but don't worry about it. It ain't the big banks. But I'm going to show you at the end where some of the big banks are at risk. But first things first, let's get to Powell about a month ago, basically saying, yeah, it's coming. Yeah. You know, it's like, are you kidding me right now? Are you kidding me? Here it is. All right. There's that. And let me, okay. I'm going to kick myself off here. Here we go. Let's bring up the video of Fed Chair Powell. He's saying that he realizes there's going to be more bank collapses. Part of what he gets into when he's talking is, well, you know, this is smaller banks. It's not the bigger banks, so it's okay. Which is why when the 5 banks collapsed last year, they got everybody to try and move to these bigger banks because you know, they're too big to fail.
We have identified the banks that have high commercial real estate concentrations, and we are in dialogue with them. So we've been working with them. And so there will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues.
Okay, yep, there's more bank failures coming. Yep, let's just put it out there. Well, no shit. Okay, sorry. There's the cynical nature of me putting it, ending off my short right there. But I mean, they know about it. They're in talks with them. Are you kidding me right now? Are you kidding me? And again, now don't misunderstand. The majority of the banks that are out over their skis are small and mid-sized banks who are, the more regional type of banks, for sure, that are the ones who gave out the majority of these kind of commercial type loans. But again, as I'm going to show you at the end from this latest FDIC report, or I'm not going to show you, we're actually going to let Lena Petrova show you. I've used her videos so many times, and I love the way this lady puts together her thought process and the way she is able to articulate global and national economic information and put it down into easy to understand chunks. Links to all of the videos that I'm referencing from her are in the description, as well as her contacts on X and Substack. So go ahead, follow her if you do not already do so. We're going to look at a couple of her videos. The first videos actually is one she did right after Fed Chair Powell made that testimony before Congress. Yeah, it's what it is. Hey, look, we got TCB in the house. Welcome, sir. We're seeing all the garbage that's breaking loose float to the surface. Amen to that. With broken money, this will be an ongoing thing. Also true. The question is, are the safeguards, in air quotes, robust enough to mitigate the damage? That is a great question, and one we're actually going to listen to Lena answer. The answer, in short, is no, because in order for banks to have enough coverage for their debt, they've been previously maintaining about just over $2 for every dollar worth of debt that they own, or that's on their books, excuse me. With all of what's been going on, especially with interest rates not getting lowered, although if you've noticed, Bank of Canada just lowered their interest rates. The ECB just lowered their interest rates. Powell sitting here, no, we ain't doing none of that, because he's trying to export our inflation at this point. But that's a completely different topic, completely different time. But in either case, those reserves, and I think that's going to be the last piece of a video, her most recent video we're going to watch. She explains how things have dropped to 90 cents for every dollar of debt. These banks are in trouble. They are screwed. These safeguards, as TCB put up there in his question, are definitely not going to be good enough for what's coming. They're just not. They're just not. But let's start out with the first of the clips that I want to play from Lena Petrova. Again, links to everything that I am showing you is in the description of this live stream. I think I got the right one here because I got a bunch of different clips queued up. Yep. All right, here we go. In this first one, she's going to be talking about that FOMC meeting and so on and so forth, where Powell decided, we ain't reducing no interest rates. And well, I'll let her talk. I'm not going to be putting words in her mouth. Here we go.
Of course, was published the date of the FOMC meeting, after which Fed Chair Jerome Powell announced that the interest rates would remain unchanged. I wrote all about that on my Substack yesterday, so I don't want to repeat myself, but higher for longer is a nightmare for banks that have been carrying billions of dollars in unrealized losses on their books since the Fed started to hike rates, essentially. Generally speaking, those unrealized losses result from investment portfolios and primarily small to mid-sized banks being heavily invested, or in other words, exposed to commercial real estate loans. As these banks struggle, and some of them likely won't be able to make it, they may be consolidated or bought by larger banks. These failing banks really only have three options at this time. Option one is to raise private capital. Option two involves actively pursuing a merger with the larger banks, which I'm assuming many of them are in the process of doing. And option number three is a bank collapse. Those are the three scenarios. This should not be.
Okay, that was the first clip that she put out in a video she put out about a month ago. Again, after the CNBC article I showed you in the beginning, after the FOMC meeting that followed, and the testimony to Congress, etc. Now, those three options that she put out there, I mean, end of the day, those are not great options for these banks. But think about this. What they want is a consolidation. When I say they, I'm talking about the government. They want to be able to have, and what did they try to do with these banks, or what did they do with these banks that failed in 2023? They basically rolled them into bigger banks and, backstopped with the FDIC. But guess what? I don't see that they're going to be able to do that. And we're going to get into, I'm getting ahead of myself here, but here we go. Even a month ago. Now, again, I've got links to live streams I've done almost a year ago talking about this very issue. And now we're seeing the culmination. We're seeing where kicking the can down the road for the last year has gotten us. It is coming back to basically bite us in the ass. And you and I we're on our own. Ain't nobody coming to save us. We need to be able to understand this information, realize and figure out what's best for us to pivot within this information and do what is necessary to insulate ourselves as much as possible with what's coming. Again, there you go. Where is it? Right there. Not financial advice, not a financial advisor, old guy interwebs, but listen, pay attention to what's going on because it's coming. It's coming. All right, let me bring up the next clip. Again, this is that same video from about a month ago. And she, in this, she's going to talk about a recent report that was done, or that time was a recent report that was done, and that it's just a matter of time before a collapse happens. And guess what? That matter of time is pretty much upon us. So let her do her thing.
A little over a month ago, Claros Group, a consulting firm, published results of its research, according to which of about 4,000 US-based banks that they analyzed during the study, nearly 300, or 282 to be exact, have both high levels of commercial real estate exposure and, in addition to that, large unrealized losses from the rate surge, a potentially toxic combo that may force these lenders to raise fresh capital or engage in mergers. So these banks are facing the worst of both worlds, essentially, if you will. Exactly. Not only are they overexposed to upside down commercial real estate loans that will likely see higher and higher rates of delinquencies in the coming month and will not be refinanced, of course, but also their investment portfolios are billions in the red. So it's just a matter of time. Looking at this data, you can conclude that it is just a matter of time at this point when the next banking crisis will begin. It is just a matter of time.
And that sums it up. And again, here we are, month-ish later. Yes, 100 Airy. Yes, she is. But yes, a little bit off topic. Not too much. Listen, this lady, I'll tell you what, if you're not following her, you should, especially if you are trying to learn and stay up to date with the latest economics information, global even, because she covers a lot of things, BRICS, etc. Matter of fact, she just put out one about Turkey wanting to become part of the BRICS. There goes another one, de-dollarization. It's happening, folks. It's happening. Again, make sure you smash up that like button. Appreciate it. Share this video. All right. But so she's saying it's just a matter of time. How right she was, because now, just a couple of days ago, here we go. You've got the FDIC basically saying 63 banks on the brink of collapse with 517 billion. You got that? Not million, billion dollars in unrealized losses on their books. Now, I do want to make the point that they are still unrealized losses, which is basically because they haven't claimed those losses. They haven't tried to write off those losses at this point. And one of the clips that we're going to watch from her, I got like 3 more clips from her, and then I'm going to wrap this thing up. But basically, those unrealized losses are just holding on the books. In the last live stream I did talking about potential bank collapses, I talked about how those unrealized, they weren't taking those unrealized losses in the last quarter of 2023 because they didn't want to like spook their shareholders. Bottom line is, but here it is, come back to bite us in the proverbial ass. All right, let's jump right in. Now, this is her talking about this particular FDIC report. And in that report, well, you know what? Again, I'm going to let her talk about it. So here she is.
So let's get straight to the point. The FDIC report reads, unrealized losses on available for sale and held to maturity securities increased by $39 billion to $517 billion in total in the first quarter alone. Higher unrealized losses on residential mortgage-backed securities resulting from higher mortgage rates in the first quarter drove the overall increase. This is the 9th straight quarter of unusually high unrealized losses.
Okay, I know she's gonna kind of hit on this point again shortly, talking about the 9th quarter. Now she's talking quarters here. Quarter, this 3 months. Basically, this is over 2 years worth of unrealized losses that they're carrying on their balance sheets. Think about all the delinquencies that have happened in that time. And you'll hear her say, when they're referring to this, it's people who are at least 30 days behind. Well, if this is going back how many quarters, 9 quarters, guess what? There's a lot more than 30 days of delinquencies on that balance sheet. There just is. Sorry, I was going to let her kind of go through, but I thought I wanted to point that out.
Since the Federal Reserve began to raise interest rates in the first quarter of 2022. So I would like to draw your attention to that phrase, the 9th straight quarter, not month, but quarter, the 9th straight quarter of unusually high unrealized losses. And unrealized losses are losses that you have not taken, right? They're just sitting on your books and you're waiting for better times so that you don't have to show that loss on your income statement. That's what essentially this means. So why is this a big deal, you may ask? Well,
and notice she definitely explained the whole unrealized loss a lot more articulately and better than I did. I'm sure you guys would rather listen to her than me, but sorry, stuck with me. Stuck with me.
This is very bad news due to several reasons, and I just want to walk you through those reasons in this video on a very high level, of course, without going into too much detail to bore you. So first of all, this means that banks are likely to have liquidity issues moving forward, meaning they will struggle with having available cash to meet their short-term obligations, such as your deposit withdrawals, for example. And that's terrible news for everybody.
She's not kidding. Of course it is. How many of these videos do you see, excuse me, on Twitter, on TikTok, all these other places where you got guys and ladies, gentlemen, whatever, walking into banks trying to get out a large amount of cash. And when I say large amount of cash, I'm talking a couple few $1,000s. And not only are they getting grilled about what the hell they're planning to use the money for, but they don't even want to give them the money. Now, part of that could be by the simple fact that they don't have the money. I mean, right now we are on zero. Sorry, guys. Zero fractional reserve banking. Zero. So they basically don't have to hold any of that money there for your deposits and withdrawals. And TCB is saying, I feel like with the next batch of years, little folk are going to have to do extra research on what banks, financial institutions are at heightened risk. It's turning into a minefield. And that was part of what I was talking about earlier, right? I mean, yeah, okay, great. The FDIC is saying, oh my goodness, 63 banks on the verge of insolvency could just poof, go and collapse. But they don't bother to tell you which ones. And again, I get it. They don't want to start a panic. They don't want to start a bank run, which will then just snowball and collapse the entire world, and never mind just the US banking system. But you're correct. You are correct. You need to I need to do much better research to figure out exactly where the as he puts it, the minefield here, the mines lie, so we don't go ahead and lose a foot, a wallet, God knows, right? So TCB, spot on as always, my friend. Appreciate you being in the chat. Spot on as always. So that brings to mind this this next piece. She's going through a couple of points. I'm only going to hit the first 2 points. She just hit the first one, which was lack of liquidity in these banks. And again, as TCB just pointed out, which banks are really at risk with this. And you can walk into the bank and maybe not be able to get your capital, to get your cash, because they physically just couldn't give it to you, even if they wanted to give it to you. So I'm going to go to the next clip where she goes over point number 2. I think this is the right one. Yes, it is. And I'll let her go over point number 2, and then I'll give you my proverbial 2 Satoshis.
The second thing to consider is that banks make money primarily through lending. So liquidity issues actually prevent banks from being able to lend, because regulators require them to make a provision for bad loans, or in other words, reserves. And so those reserves are usually based on a very specific formula that factors in their current delinquency rates, associated risks, their forecasts moving forward, etc., etc. So we should see bank reserves rise when banks report their second quarter financial results here in July next month. Having adequate.
Okay, and then she goes on about explaining why that's important and so on. But we're not going to go down that road. I got one more clip from her, which is pointing out what I spoke about earlier in the amount of cash reserves that these banks have in reference to the loans, that commercial loans that they have on the books, and how it's gone from over, I want to say it was like $2.20 or something stupid like that, all the way down to less than $1.90 is what she's going to highlight here in a minute. But think about this. These rates staying high, as Powell isn't adjusting rates, means that it's more difficult and more costly for people to go ahead and get loans, whether those are commercial loans or those are private loans like mortgage loans, those kind of things. The bottom line is the people can't afford to take out the loans. Then couple that with the fact that these liquidity reserves are so low in these banks that the banks don't have the liquidity to lend anyway. Don't get me wrong, I get it. They create a loan, they basically print the money into existence. And again, I'm using my air quotes there. But who is going to want to take out a multi-million-dollar loan with interest rates in excess of, God knows, easily 7% right now, right? Nobody. Who can afford that? Nobody can afford that. Nobody. All right, I'm going to bring up her last piece. we're going to recap, and then we're going to close this puppy down. Let me bring up that last screen. Here we go. And we're going to let her do the talking.
Take a look at those videos. One thing I would highlight here is that the longer interest rates stay elevated, and we know that inflation is not going away, so it is a tough position to be in, but the longer rates stay elevated, the more trouble we will see in commercial real estate lending, and the bigger impact it will have on the financial sector, on the banking industry specifically. According to International Banker publication, the average reserves of JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, Goldman, and Morgan Stanley fell from...
Okay, I just want to stop right there for 1 second. Remember how we heard Fed Chair Powell saying, it's not the big banks, don't worry about it, you know, and what did they do? The banks that collapsed, they rolled them into a lot of these banks that you literally just heard her read off. And here we are in this report, and the amount that even these big banks are out over their skis with having not enough liquidity for these losses that they're carrying on their books is astronomical. And these are the big banks. These are the big boys, too big to fail. Too big to fail. And Chris is chiming in. He says, my children may never own a home unless you're not wrong, Chris. You're not wrong. And part of the reason why I think, you know, Bitcoin, cryptocurrency is going to be the key. The only house prices have gone down in Bitcoin. When you use fiat, obviously, back to the roof. And, well, again, not exactly where I want to go, but you're right. You're highlighting the issue here. You are correct, Chris. And it is a sad state of affairs. That's how I feel when I think about my grandkids going forward. Anyway, so we're going to get back to this, but I wanted to stop and make the point. She just highlighted the biggest banks in the U.S. The biggest banks. So I'm going to let her finish her point on this report.
From $1.60 to only 90 cents for every dollar of commercial real estate debt on which a borrower is at least 30 days late. This is just terrible. This means that delinquent commercial real estate loans, which tripled to $9.3 billion for the 6 big U.S. banks over the last year, have now surpassed, and please pay attention here, have now surpassed the amount of reserves being held at those banks to cover them. They don't have enough reserves to cover those bad loans, which could prove hugely problematic should those loans end up in default. In late March,
and some of them are already in default. Some of them are already there. These banks are just not writing it off at this point because, again, it would spook the market and do what? Cause the very collapse that, quite frankly, is coming in slow motion, but cause the collapse they're trying to basically say isn't happening. TCB is chiming in here, says, in my opinion, the bags will be able to borrow funds. Oh, sorry, the bags. Old man eyes. The hogs will be able to borrow funds direct from the Fed to fill in as reserves. And he puts in quotes, unless the rule as is prevent them from doing so. Well, they tried to change that around, didn't they? As I recall, which is why they've already done like the global, oh my God, the bank is collapsing, the economy is collapsing, the banking system is collapsing drills in what, a couple of years ago now, I think it was. But yeah, the Fed will have no choice but to backstop them. They'll backstop them with the FDIC or attempt to backstop them, I'm guessing, with the FDIC, which can't handle the onslaught that's potentially coming. So let's pull this all together. For a year now, I've basically been saying, listen, It's coming. These banks are not on solid ground. And though that you may not hear it through mainstream media, it's true. The facts are true. And we've watched the slow and steady decline of this system with bank failure after bank failure. And now to the point where the latest FDIC report is basically warning everybody that, guess what? You got over 60 banks on the verge. They're on the precipice. It's happening whether we want it to or not. And I don't know. I believe it is going to be an orchestrated. Wow, say that 5 times fast. And again, not even drinking just coffee here this morning. Cheers, by the way. Fall. It's going to be an orchestrated fall of this system. So what do? Again, where is it? Right there. Not financial advice. I don't know. I still see cryptocurrency as the way. I still see DCAing into crypto as an option. Learning how to be able to use crypto to survive. Also an option. Link to that entire playlist that I put together in the description of this video. My plan is actually, as all this information has been coming out, is to try and reach back out to Joel Valenzuela and see if I can get him back on to do another interview and kind of talk about, okay, things have just, since our last talk, have gotten so much worse. What can we do? Anything new, that kind of thing. So watch for that. I'll let you know when that's coming out. Hopefully he'll be able to join me and we'll be able to have a good conversation about that. And hopefully he'll be able to do it live and you guys can ask questions live in that stream. So watch for that. But you and I need to be able to do our own research. Let me even bring that up. You need to be able to do your own research because, my needs, my financial situation is different than everybody else's. What I'm giving you is a kind of what I'm doing and a general reference to some options at your disposal to be able to help insulate yourself. And that's the key. That's the key. We're all going to suffer through it. When, this shit hits the fan, we're all going to end up suffering through it. All of us. How badly we suffer will depend on how well we've prepared. That's the way I see it. So again, links to the Living on Crypto series in the description of this live stream. If you're thinking or don't know how, and I know most of the people on this particular live stream right now know how to DCA into crypto, and they do mining and other things, investing in order to do a DCA into crypto. But if you happen to be watching this after the fact, you're new and you're not sure, pretty much every Friday night, except for tomorrow, sorry, I do Crypto on the Rocks, and I show you how to take $25 a week, put it into a crypto portfolio, and help to build your wealth with that. That's pretty much what I have at this point with regard to this. TCB saying viewer plug to check out CCM's link for Acre Gold. Thank you. I wasn't even going to mention that, but I appreciate you doing that. Okay. And I did mention this on yesterday's live stream, diversifying your portfolio of what you're investing in. And listen, gold's been money since forever. So I appreciate TCB pointing it out. Link is in the description of this live stream for Acre Gold. Basically, you can DCA into gold too, beside crypto and so on. They'll, for I think the smallest package that Acre Gold has is $50 a month. And once you get the right amount to purchase, I think it's 2.5 grams at that point, it will get shipped straight to your door. So it's easy. You don't really have to do anything with regard to dollar cost averaging into gold if that's what you look to do. So thank you, TCB, for bringing that out. Yeah, I wasn't going to mention that, so I appreciate that. Thank you, sir. And that's again, that's pretty much what I've got. I appreciate everybody that's been here. I appreciate all the interaction in the chat, all the comments. Listen, I know I keep harping on it about, you know, things with the economy, things with the banks, things with the US dollar. And is it going to happen tomorrow? Probably not. Is it going to happen? Absolutely. I'm sorry. I don't care how you slice or dice it. Shit's going to hit the fan. What you do about it is up to you. Up to you. All right. I'm going to wrap. I appreciate everybody that was here. Thank you to everybody in the chat. I, again, remind you, no Crypto on the Rocks tomorrow night. I will be back at it on Monday for sure, for my normal Monday through Thursday, 10 a.m. And don't forget, next Tuesday, we're going to be live on the Matrix Money podcast as well. And amazing stream as usual. Thank you. I appreciate that. Automatic Beats, appreciate that always. All right. Yes, be well, everybody. I'm out. I hope you have a great day. Have a great rest of your week. I hope you have a good weekend because I won't be able to wish you that tomorrow. So take care, and I will see you soon.